everyone.
Hi.
I'm here with Albert Sousa from Mortgage Apex, and we're going to talk about current relevant data that's going to help you save on closing costs and your monthly mortgage payments. So in the last 2.5 years, we've seen a really hot seller's market, and it's cooled down in the last 6 months significantly because of the rise of interest rates. What this means is there are new opportunities for buyers to get their closing costs fully paid for, which I'm going to segue real quick and say if you're a VA buyer, you are able to get 100% financing, and if you can negotiate closing costs, you will have very little cash to bring to closing in order to purchase a home. So this is the land of opportunity. Don't let the interest rates scare you. Albert and I are going to go over very practical ways that we can get you saving monthly and how that's different than just trying to negotiate the price drop down. So that's my take on the real estate market. I'm going to let Albert take it and kind of talk about what the mortgage market is looking like right now.
Yes, so my name is Albert Sousa. Very honored to be here with you today. I've been in the mortgage business for about 5 years and owner and founder of Mortgage Apex, and we're a local mortgage brokerage. And so we're going to talk a little bit about where rates are and also add to the fact that we're in a great real estate market where we're seeing those price drops, we're seeing those lower than full price offers being accepted, we're seeing concessions being accepted where we weren't seeing that before when everything was super red hot. So this is actually a great opportunity. And the reason why we saw that little bit of that slowdown, we've seen the power come back into the buyer's hands, is because rates have risen. So you've probably seen on the news that rates are rising and that we're at these highs, and also that inflation is rising too. Well, we actually are starting to see rates come down off their highs. So compared to 1 month ago, we've seen about a full percentage point decrease across the board, which for a $450,000 loan means over $300 a month in savings for you. So if you're waiting for an opportunity, or maybe you were a little bit frustrated with the amount of house you could buy, you've now opened up that door to that next price range where you can now buy more house for the same amount that you could even just 1 month ago. So we've really got a great opportunity here, and it's very important that you work with an expert who knows how to save you the most amount of money and really use the tools that we have so you get the most bang for your buck. Because like Sereen said, if you just negotiate $10,000 off the purchase price, that may not actually be the best way for you to save money. So we can maybe dive into some of those things today.
Yeah, and I'm really excited because I work in Northwest Florida. So if you're watching this in another part of the country, an average 3 to 4 bedroom in our area is about $450 right now. So that's why we're going to go over that specific number and have an example for you. And Albert's right. Like, if you want to save the most monthly, it's so much better to negotiate the interest rate and know about what loan programs there are and creative ways to save you money there are. So Albert, would you mind kind of going through what interest rates are today for a $450K purchase price for different loan programs and what that looks like monthly?
Absolutely. So I've got some numbers prepared for you here. I priced these out this morning based off of excellent credit scores. And so this is full disclosure, you know, every single person is going to be different, but this is just going to give you an idea of what it'll look like. So at $450,000 for a purchase price, we are, for a VA loan, you can do 100% financing, which means you don't have to put any money down. So you can get a $450,000 purchase price and a $450,000 loan. Right now, that's sitting at 6.25% as of this morning, which means a monthly payment would be $28.34 for your mortgage. It's excluding your taxes and insurance, which is going to be property specific, but we want to keep things simple. It's just your mortgage payment of $28.34. If we compare that to just 1 month ago, when we were at our highs, we were seeing a 7.25%, which means it's $31.40 a month, which is saving you $306 a month for the same exact house just 1 month ago, which is pretty massive. In a conventional scenario, we've got a 5% down payment, which means you've got a loan amount of $427,000 at 6.5%, payments of $27.69. Again, compared to a month ago, 7.25%, that was $3,020. So $251 a month cheaper for your conventional folks. And so we're seeing these big savings, and people aren't really talking about it because it happens so fast. So it's important for you to keep your finger on the pulse, and that's why we're here today to share this information. And then the last thing I wanted to tell you about is we're a local brokerage, and there was a study that was just published recently showing working with a local broker versus a big box lender.
Yeah.
And they found that you saved an average of $9,300 in total savings from working with a local broker versus a big box lender. And the reason for that is a few. Number one, we have access to some really competitive interest rates because we work with multiple wholesale lenders, and so they're all competing for my business. And because of that, when there's competition, you win. And number two, we don't charge any lender fees, and we don't charge any points unless you choose to do so. So that's thousands of dollars up front that they could be saving, because a lot of lenders, you may find, will bake in a 1% origination fee or underwriting fees, processing fees, etc. And so that's where you're really going to have a lot of savings with us as a local broker.
Yeah, that really adds up quick. So, and just real quick, if you don't know, if this is your first time buying a house and you don't know what a discount point is, so Albert's showing you the numbers of what he's offering without discount points. And a discount point is basically when you pay interest up front to bring your interest rate on the loan down. And we're going to talk a little bit more in depth about that later and how we can actually get the sellers to pay for that instead of you. But these rates are without discount points, and he touched a little bit on some of the big box lenders and online lenders. When you go online to get a pre-approval with a bigger mortgage company or lender, the likelihood of you being charged extra fees is huge. There's a 1% origination fee, so at a purchase price of $450, that's automatically an extra $4,500 that's coming out of your pocket in closing costs that a local lender does not charge. So immediately by going with a local lender, you could potentially save $4,500 in closing costs. But also, you have the opportunity to take this rate and bring it down even further, saving you more every month. So
we can talk about how the seller can pay that. So with the VA, you can get seller concessions, or with almost any loan, but VA you can get up to 4% seller concessions, which means on a $450,000 purchase price, you can get $18,000 in concessions for us to work with. And this is what we were talking about in getting the most bang for your buck. If you were to, let's just say you get $10,000 in concessions, and you were working with someone who just said, oh, we'll just take the purchase price off by $10,000, you may not be saving as much as you could be. And so where someone like Sereen will know to put into that offer that we want to make sure it's going to the right thing so you can save the most amount of money, we're going to show you what that looks like.
Yeah.
So, So $10,000. I've worked up a couple of different scenarios here. If you just knock $10,000 off the purchase price, you're going to save $61 per month, which is better than saving $0 a month,
Right,
but it's
right.
only $61 a month. If you take that same $10,000 and you put it towards buying down your interest rate with discount points, like Sereen was mentioning, you're going to save $285 per month for the whole time that you hold that loan. The third option, and this is something that's coming around, it's more of a new program, which is awesome, is a 2-1 buy down, a temporary 2-1 buy down. That means in year one, it's going to simulate you having an interest rate of 2% lower, so from a 6.25% down to a 4.25%. Year two, it'll be 1% lower down to 5.25%, and then year 3 through 27, it'll be your normal 6.25% interest rate. But why that's huge is because year one, you're front loading your savings. So you're saving $557 a month in year one, which we have found that most people run into a lot of their expenses in year one when you're furnishing your home, you're buying tools, you're painting and doing improvements. So that's the year when you really have a lot of expenses. Then year two, you have $285 a month in savings. And then year three, it goes to the normal. So the reason why this is really powerful is because we believe rates could come down in the next 6 to 12 months. And if rates come down, let's just say the rates come down in 6 months, and you paid $10,000 to buy down your rate, that means you only save $285 per month for 6 months, which means you save $1,200, and the rest of that $10,000 is gone.
Right.
But in the same scenario, if in 6 months rates drop and you have an opportunity to refi, you've saved $3,000. Shoot, I gotta do math here. You saved like $3,000. Like $3,300, right? And so you save $3,300, but guess what? That $3,300 is being pulled from these concessions of $10,000. So that means you will be able to get whatever's left over refunded back to you, which in this case would be about $7,000, about $6,500 to get refunded back to you. So that money is not wasted.
Right.
So really huge opportunity to save money, but also know that lower rates may be coming down the line. And so we want to make sure you're not wasting any money.
Yeah, and so this program is really powerful because it buys you time until rates go down, and it saves you money until then. but also you're saving significantly more than if you just bought straight buy down points, and significantly more than if you just negotiate the purchase price. Now, real quick, if you're if you're a first-time home buyer and you don't know how much is typically normal to pay in closing costs, you will have to go ahead and save 2 to 3% of the purchase price. Now, is it okay if we flip this
Yes.
back real quick? Albert touched on something that I think is really important to know. So say typical closing costs are 2 to 3% of the purchase price. I'm gonna talk to VA buyers right now specifically. Your VA loan will allow a seller to pay concessions up to 4% of the purchase price. So in some cases, almost double what your closing costs will be. So that's where he's saying you will have, if you were to get $18,000 in seller concessions, you would use some of that to cover your lender fees and title fees and whatever your closing costs are, which typically include prepaid interest, taxes, and all that, insurance as well. But then you're gonna have money left over, so what are you gonna do with that money? You're gonna use it to buy down your rate. And this is where, as a realtor, I would work that into the offer. Instead of negotiating the price down, I would negotiate a seller concession where the seller would net maybe the same amount as if I negotiated $18,000 down, but you're gonna save more money monthly. So these are all in place now, and Albert and I are available for questions. I'm gonna put his contact information in the comments and my contact information as well. So if you want to get pre-approved, you're ready to start back in your house shopping process and you're ready to get back on the horse, we're ready. We have programs, we are ready to write offers that help you win. So feel free to contact us. But
I want to say one thing. Yes. So with closing costs, just to translate that 2 to 3%, that means 2 to 3% of the $450,000. So that's between $9,000 and $12,000, let's say, depending on the age of the home and how much insurance costs. But you don't necessarily have to have $9,000 to $12,000 saved, because if we get these concessions, that means you could potentially get into the deal for almost $0.
Right.
So even if you don't have a lot of money saved up, but you are a VA buyer, that is not going to be an obstacle that is going to stop you from being able to purchase a home.
Exactly. So buying a home is accessible. Don't let the interest rate scare you. Don't let the news scare you. Just talk to an expert, and we're ready to answer any questions you have. So thanks for watching.
Thank you. Awesome.